Let's get it on to our next session now. We're going to bring you some insights from NN Investment Partners. This is our climate leader insights. How is the sovereign market responding to climate change? I'm very happy to welcome Edith Searman, Head of Fixed Income and Responsible Investing at NN Investment Partners. As of January 2019, Edith joined NN Investment Partners as Head of Fixed Income Solutions and Responsible Investing. She's part of the management team, investments, and adds additional focus on responsible investing within fixed income. Edith, thank you very much for joining us today.
Welcome, happy to be here.
Edith, this is where I get to grill you, so I'm very excited about this. Now, I know all the attention when it comes, Edith, to ESG, all the attention when it comes to ESG integration seems to be on the equity space, but big inroads is made within fixed income investments. Do you expect to see more growth within fixed income investments in 2021, 2022 and beyond?
Yes, definitely. I see that growing and growing. And yeah, rightly so, I think for many reasons. First of all, many of our clients, institutional investors, but also retail clients, have large allocations to fixed income. So if you apply ESG integration only to equities, that is obviously a very partial approach. Secondly, there's absolutely no reason not to apply it to fixed income because all the strategies that you apply to equities, probably except for voting, can be applied in fixed income, in credit markets, but also in sovereign markets. So there's absolutely no reason not to do it. And on top of that, the fixed income market offers a wide range of possibilities on top of the fact that we have credits, we have sovereigns, but we also have instruments like green bonds, sustainability-linked bonds. So a large variety of possibilities to apply ESG in fixed income. But I think most important reason, on top of all the reasons I already mentioned, is the fact that, like in the equity markets, ESG and sustainability have an effect on the returns of fixed income. For example, if you think about a country that is having difficulties with climate and is not resilient, one day it will translate in the returns or lesser returns of that country. So taking ESG and sustainability and climate risk into account in fixed income is very important if one keeps on striving for the best returns and sustainable returns.
So Edith, how can green bonds, sustainable sovereign bonds then be instrumental in managing climate risk?
Yeah, green bonds. And I think if you look at the public markets, equities, fixed income, is a perfect instrument to which you can have direct impact on sustainability. Because if you invest in green bonds, the proceeds of these bonds are used for climate-related projects. So it's a perfect instrument if you want to have impact on the real world. On top of that, if we invest in green bonds, it also gives us access to the issuers. And by access to the issuers, you can have an active dialogue with those issuers, which are in many cases also sovereigns. And normally it's quite difficult, of course, to have a discussion with a sovereign about ESG risks, their climate strategy. But once they're issuing green bonds, it opens up the door to have that kind of discussions. And yeah, that adds to, the sustainability approaches and also to the sustainability information that we have and therefore the sustainability of our portfolios.
What about the impact of regulation, Edith, government financing and the green recovery?
Yeah, there's a lot going on, especially when you look at the EU Action Plan. They're stepping up their efforts majorly, putting a lot of effort in, for example, the taxonomy. And well, the idea behind it is to facilitate and help investments in the financing of a low carbon world. And the taxonomy helps to create common definitions, a common language in this whole RI world, which is definitely needed. And is therefore very helpful because it saves a lot of time for us as analysts to analyze different green bonds, for example, and compare them to each other. On the other side, also our investments are more and more regulated by SFDR. SFDR creates a common language when it comes to how to apply ESG strategies in different portfolios. So a lot of work is done to create common language and to make investments more transparent and create more data. What strikes me at the same time as a fixed income investor and definitely as a sovereign bond investor is that most of the attention currently is paid to corporates and providing and projects, providing a common definition for how to deal with ESG. It strikes me to see that there's so far little or less effort to also establish a common language when it comes to sovereign issuers. For example, sovereign issuers have their own climate strategies, but they have their own definitions and, of course, also their own targets. And for us as investors, up until today, it's very hard, therefore, to compare those plans and to exactly understand what they mean by certain terms and certain language. So I would definitely like to encourage regulators and the EU, and I understand it's politically maybe a bit more difficult, but to step up the efforts also in that direction. That would be very welcome.
Are we making progress when it comes to forging a common language when it comes to sovereign issuers, Edith? Is there progress being made or not enough progress?
Yeah, I think too little progress. I think there are some steps, and I think the fact that sovereigns issue green bonds and have to deal with the green bond standards and the common languages that are used there. I think sovereigns become more aware that a common language is needed and is helpful and welcomed by investors. But there's definitely room to do more, and I'm very positive. So I think that will happen, but a bit more effort would be welcome.
You've issued a rallying cry. We like that, Edith. Just give us a sense, Edith, about the green bond market. Give us a sense of how big it is, how big it's becoming, size and scale.
Yeah, it's growing very fast, and I think that is not only showing that there's interest to issue, but also that there's a lot of appetite for green bonds. Up until 2019, that growth was very much driven by government-related issuers that issued in the green bond market. But in 2020, that was suddenly taken over by corporates. And in 2021, we see again that sovereigns are taking over. We saw a huge issue in the beginning of the year from Italy with a size of 8.5 billion. So very large. And even more striking is the fact that it was 10 times oversubscribed. So there's even more appetite. We do expect the UK and Spain to issue green bonds, and also the EU to step in. They have announced to finance around 250 billion in green bonds, and will very likely also become the largest issuer in the green bond market. And we also expect them to step in this year. So all in all, we expect an issuance of 400 billion this year. And so far, the market was around 600 billion. So almost doubling the size into 1 trillion. And that's a very sizable market, growing very fast, and therefore offering plenty of investment opportunities.
There was a common factor there, Edith, in all those countries. They're all within Europe. I can't say the EU, of course, now for the UK, because the UK is no longer in the EU, but within the European landmass, why is Europe leading the way when it comes to sovereign green bonds? And I suppose the same question, but flipped over, when's the rest of the world going to catch up?
Yeah, good question. Very good question. Indeed, the 5 largest issuers are all European. So it's very much dominated, like you say, by European players still. But we're positive. With Biden is now elected, and we expect a more climate friendly approach from the US. Maybe not everyone might know it, but municipality green bonds are already out there. And also corporates like Apple and Verizon have issued green bonds already. But with Biden in charge, we might even see a US green bond coming up. We wouldn't be surprised, so we're hopeful to see more issuance there. On the other hand of the world, China has been quite active in the green bond market. We haven't seen China in 2020, but we think China will come back. We're positive about their commitment to net zero targets in 2060. And we definitely think that will mean that they will issue in the green bond market going forward. What we also very much appreciate and is interesting to see is that also their green bond standards they have aligned it better with the EU green bond standards. So I think that means also that the EU is not even not only effective within the EU, but is also becoming a sort of benchmark globally. But it also shows that China is very willing to enter this market and be more active in this market, and therefore aligns with the standards that are in this market. And
is there a political? Just jumping in there, Edith. Is that a political hot potato? We don't want to get too political here, but let's try it. If China aligns its standards closely with the EU, given the US-China relationship, you know what I'm getting at here, do we have a problem here on our hands if China aligns too closely to, one part of the world, given that another part of the world might have issues with China? How do we, this is a broader question, how do we attain global standards when there's so much delicacy around the geopolitical framework?
Yeah, true. And of course, this political framework, this geopolitical framework, is something that is out there. But with regards to the green bond standards, to be honest, I don't really see the geopolitical angle in there. The alignment is very much related to the definitions and to defining what do we see as a green bond project, And for example, what they have aligned with is that clean coal is no longer eligible for green bonds. And that was not eligible on the EU side. And yeah, I think that's a good thing, and is not really related to geopolitical issues. But maybe that brings me to another topic, that even though green bond labels are out there, the green bond standards, the common definitions, agreement on eligible projects, that's helping when you invest in green bonds. But like in any other investment you do as an investor, it's still very, very important to do your own homework besides all the standards that are out there and the information that is provided and maybe audited. It's very important to keep on doing your own homework. And yeah, within our own strategies, that means that we not just look at the green bond itself, but also make a very thorough analysis of the issuer. Because, our stance is that we rather do not invest in a green bond of an issuer that uses the instrument in a particular opportunistic manner. What we'd like to see is that the issuer takes responsibility very serious. And we like to see that the green bond issuance is part of a larger plan, and that the issuer is serious in bringing sustainability forward. And yeah, also other aspects, not only the climate aspects, but also the other S&G aspects you need to analyze, because an issuer can do well on the climate side, but does a lot of harm on the governance side. So you need to take all the elements into account and also analyze the issuer very thoroughly, because at the end of the day, also the risk that you run when investing in a green bond is related to the issuer and not to the proceeds of the project. So it's important to keep that in mind. And yeah, unfortunately, the labels that are out there are helpful, but not an excuse not to do your own homework.
Yes, always do your own homework. Edith, we're getting a question from the audience, which is exciting. How does your assessment process and approach differ for emerging market sovereigns versus developed market sovereigns? How does your assessment process and approach differ for EM sovereigns versus developed sovereigns?
Yeah, very, very, very good question, and a question that that you can talk about for a long time. The starting point for us when looking at emerging markets or developed markets is very similar. We start with looking at the development of a country, but also at the stability of a country. The stability with regards to material risk factors that we have identified for countries, such as climate risk, but also social economic risks, fractionalization, all kind of risks that we have identified, and we look how those risks are mitigated. So the starting point is basically the same, but there are indeed important differences between emerging and developed markets. An important difference is that data is often less available for emerging markets. That's why within our company, we use, for example, AI techniques to estimate ESG scores ourselves for countries. Another important difference, and that's something we take into account both on the sovereign side but also on the corporate side, is that you have to take, in our view, a more holistic view when looking at emerging markets. And I mean with that if you, for example, look at a climate strategy of a sovereign or a corporate, and you would only address that climate issue, perhaps you could bump into the consequences of addressing that climate issue, because the social position or situation deteriorates because of addressing this climate issue. And that's why we say you need to take a very holistic view and look how all factors interrelate to each other before assessing or raising an issue with regards to a country in an emerging environment.
Edith, we're getting another question. We love our questions. Keep them coming, audience. We love your questions. Now, Edith, here's the question. With regard to fixed income strategies and sustainability, what are the points of overlap for integration and reporting between ESG factors and the SDG framework, especially in the light of SDG-linked bonds as issued by NL in 2019 and ENI in 2020? So what are the points of overlap for integration and reporting between ESG factors and the SDG framework?
Yeah, another good question. Of course, ESG factors very much relate to SDGs. It's part of the same world. I think you could say that if you look at ESG factors, you could sort of link them to certain SDGs. So, for example, let's say, an S factor like social probably relates to an SDG that is linked to social as well. So you can map ESG factors into SDG factors, and I hope I'm still clear. It's hard to explain.
Edith, thank you so much. That was absolutely fantastic. Thank you. Everything you needed to know about fixed income investments within the space that we're talking about, sustainable investing. I loved everything what you said about the green bond market. Absolutely fascinating. Thank you so much, Edith. That was
Welcome.
Brilliant. So much insight. More questions are flooding in as well, which we always love. So the audience has so much more to ask you. Visit the expo, of course. NN Investment Partners are there. They'll answer your questions, any question you want. So thank you, Edith. Thanks for your time.
Welcome.
See you soon. Thank you so much for your time. That was Edith Searman. What a day we've had. And we're not even done. We have more for you. Yes, it's all about giving today.